Welcome back to the YouTube channel, everyone. Episode 6, April 9th. Let's get straight into it, shall we? Make sure and book your travel, get your registration taken care of, make your way out to the Czech Republic, where I will see you. I'm giving a Stack Early, Stack Hard keynote talk, as well as it's going to be a super exciting panel with my great friends, Plan C, Matthew Mesinski's One Base Money, as well as our good friend Mauricio of Mr. M Podcast. So make sure use the promo code Sminston if you want to save a little bit of scratch on the registration side. I addressed, I think, a circulating narrative that is becoming a little bit more frequent due to what I believe is a misunderstanding of a possible threat vector to Bitcoin. I talked a little bit about the math, I think, in a previous episode, but here I wanted to show what I think is extremely telling in terms of how strong Bitcoin's network is, despite the competition, and there is competition for electrical consumption by AI, right? And the data centers required to do the training, the inference, and all that. And that's only continuing to go up. We're seeing that. You can see this cluster of data points in the bottom left. That's really how many of us had heard about AI in 2018, right? I'd say after 2020 and beyond is really when it started to become ubiquitous, and the spacing out of these data points tells you that the pace has been quickening for the electrical demand and how hungry these AI data centers are. On the Bitcoin network hash rate, so the hash rate side of things, this is a simple plot of AI electricity consumption versus Bitcoin network hash rate. And you can see that, it follows a pretty stable trend even in the linear side of things. But AI has been such a recent phenomenon, but the magnitudes, it's grown by an order of magnitude very, very quickly since 2020. So 25 terawatt hours to 225 terawatt hours. But Bitcoin hashing has not slowed down at all. It's continued its power law trend, and it shows here. So as a linear representation, it's already got a 95 R squared. Then I dug a little deeper, and I wanted to distribute these data points a little better. So the way we do that is do our log scale. So here we can see the jump in orders of magnitude electrical, eating the electricity on the AI side. On the Bitcoin hash side, you're spanning multiple orders of magnitude, which is what we'd expect according to the power law. It's a scaling law. Put the two together, you have essentially 0.947 versus 0.949. It's a negligible difference. So on the relatively short time scale of 5 to 8 years, call it 5 to 8 years, you're going to see a pretty similar fit. But I guess the key takeaway here is that the Bitcoin's network does not give a crap about AI coming in to compete for electrical. Yes, do they compete for each other? They do. But what drives Bitcoin's price, I would argue, is adoption, which we also see in the power law behavior. And what's reflected through a combination of physical mechanisms, difficulty, for example, and that demand, you see an ever strengthening of the Bitcoin network. So it remains the world's most powerful computer network that we know of. The trend has not really changed here. In fact, between 2018 and 2023, we overshot the trend by a decent amount in terms of Bitcoin hash rate. There's a bunch of possible explanations for that. The proportion of AI electrical consumption, by the way, has now matched and is starting to exceed that of what's required to support the Bitcoin network, a la hash rate. So that's crazy. That's happened in about 5 years, guys. You would think with that sort of explosion of demand from AI that this would be veering way off course, but it's not. Again, feel free to go check out the deeper dive post if you join Subclub. So this is Bitcoin interest and Google searches, right? So we've got Bitcoin, Google searches. This is something a lot of people know can get access themselves. The great thing about Google Trends is you just go to Google Trends, type in Bitcoin as the search term, and it will tell you it's always relative amounts. So it'll find the local maximum, and then everything else will be relative to that. The most recent maximum, if you plot the last 6 years, will be running up to, not quite on, but running up to, say, about 3 or 4 months to the first price peak of 2021. There was a double peak. But then it dropped down after that first price peak to levels that were relative to the peak, like around 40, 45. And right now, you can go and look this up yourself, but we are right about that same level, even a little bit higher, which look at what the interest rate was before that bull run. It was about 20% relative to the run up to the 2021 bull run. So what does that say about now? Well, if I expand this out all the way back to as far back as Google searches will let us go, and I think I have a really old post on this, it'll show that this tracks pretty well with the adoption behavior, meaning power law type of behavior. So I had a good chat with Bram Canstein. In fact, keep an eye out for our next episode coming out. It's going to be wild. He was asking, well, can't this be in part largely attributed to the negative news and the FUD, a lot of FUD narratives in the last, say year, and he's right. But these have caused these spikes. When you're tracking if you imagine what the average is doing here, in my view, it makes a lot more sense that we're just talking about an expanded pool of those who are interested in looking online to understand and study Bitcoin. So really great news. I think that this is probably also short-term bullish because there's always a build-up before the blow-up. So keep an eye out. The other big news, of course, from last week was the ISM printing for March. We're now in April, beginning of April, so April 1st, printed 52.7. Some of the business cycle haters noticed that we went from 52, when we first jumped above 50, right? We went 52.6, and then that was for Jan, and then we went to 52.4 February, and, it was basically sideways action. A lot of the skeptics were going, well, is this going to be a reversal? Was this just sort of a noisy uptick? But no, in fact, we popped back up. I mean, it's somewhat still sideways action. For us to start seeing much higher Bitcoin price as per the correlation with the ISM PMI, we're going to need to see this value explode a bit more. But it's not going away, I guess, is the big takeaway for me. So if you remember the trend going like this, which this is 50. We were in contractionary territory for many years, 3 years, blew up, didn't know if it was noise or not. Instead of going down, I kind of did that. So bringing back this old chart, I call it an old chart. I think I first showed this, I guess it was December. Plan C and I came out with the article hypothesizing that this is really more in sync with the business cycle and has a lot less to do with the halving cycles these days. But I don't need to get back into that whole narrative because you guys have been following along. So we'll have to update the Z-score now. I believe the Z-score the baseline for Z-score here would be 0 because the average is not 50, believe it or not, for PMI. It's something more like 52, 53, and we're right about there. So I believe that we should, I'll have to update the Z-score value, guys. But that's a significant jump. So from a Z-score perspective, we still want to be pushing north of that to see that lagging Bitcoin price, which can be a number of months. So still early. I posted this a second time, and I think a lot more people saw it the second time. But what I did here was I took the power law trend. So in log space, we're doing a straight line. As we know, that's how the power law for Bitcoin rolls. And the nice thing about that is I had this great idea because I like to do data deep dives, but I really care about nice visualizations to get the story from the data across to the general viewer, and it helps me a lot out as well. So what I did was I set the power law OLS average trend line, that's the white line, as the 50 value for PMI. So now we see the PMI cycles oscillating about that, right? Around the times that we expect them to. So instead of just looking at a horizontal squiggly line and having it be a little more abstract, now things make a little more sense and are lining up pretty in sync the way you expect them to. Even with some of these smaller ripples, like there is even some good synchronicity there. So the correlation here is pretty hard to deny, I think, when you put it in these terms. When you set the power law trend itself as the equivalent of PMI 50. So you can see when you start to dip red, it's not perfect in the early days, but this is only 2012. The correlation got stronger and stronger. So green, shading the green, that's exactly where you saw that bubble in 2014. It started to trend down. Oh, by the way, another follow-up analysis to this. I need to look at the rate of change, I think, of the PMI is probably maybe a better way to do it, because you see the rate of change of the PMI changing here, and that's when we start to dip below the trend line for Bitcoin, and then we're down in an accumulation market for a while. Rate of change starts to pick up here beginning of 2016 for PMI. A few months later, same thing starts to happen. So on and so forth. So keep an eye out for rate of change analysis for this. Here's the zoomed in. I just love the way that this is visualized. I just love it, guys. This perspective gives you an idea of how patient we need to be, because look at the types of lag we can have. The average lag of 1 to 2 months, I think it's close to 2 months. If you look at the lag analysis, takes all the data into account. But if you just look at these last 2 cycles, it can be, it could be, say, 2 to 5 months, somewhere in that ballpark. It's only been since we had this jump up. Yeah, technically we got 3 months, but that still leaves a lot of room left for either the PMI to go up or for the price of Bitcoin to start to stabilize, which it already kind of is. I think it jumped back above 70K going into today. So, but thanks for sticking around for this week's episode. I did want to give a shout out to Mr. M, Mauricio. He's got his own very successful and fast growing YouTube channel, 30.7K subscribers. Wow. We have our own segment that we do once a week. So in addition to following this channel, I want you guys to go check out Bitcoin Uncharted, which is hosted by Mr. M, but it's Mr. M, myself, and Plan C. Weekly alpha there for sure, and great chemistry, if I do say so myself. As always, if you guys like this and you want to get really rich deep dives, weekly dedicated posts to my beloved subscribers, as well as a lot of hot takes throughout the week as far as where the market is, sign up for Sub Club. It's $20 a month for my X account. So go to my X, click on the pink buttons. You'll be good to go, and you'll be in an elite club unto itself. Thanks for being here, you guys. As always, I couldn't do this without you, and I'll see you on the other side. Take care now.